Ever get that feeling where you want to like really get what's up with a huge brand? Like say Nike, their stock, the whole picture. But who has time to wade through mountains of reports?
Yeah, totally. It's information overload out there.
Exactly. So today we're doing like a super focused deep dive on Nike, NKE on the ticker tape. We've gone through a brand new stock analysis, all the earnings call stuff, what analysts are saying.
Letting through the noise.
Exactly. Our mission today is simple. Give you a clear picture where Nike stands now, their challenges, and what might be coming down the line, all without wasting your time.
Sounds good to me. Let's jump in. What's super interesting to me looking at all this data is how the numbers, what Nike's management is saying, and how Wall Street is reacting. It all kind of paints this story, right? About this iconic company.
Totally. Let's start with the stock itself. March 3rd, 2025, Nike was around 67.39 bucks a share. But here's the thing, the analysis says it's actually worth more like 78.59.
Undervalued.
Potentially, yeah.
Okay.
And over the last year, it's been all over the place, between $65 and $98. A bit of a roller coaster.
Wow, yeah, that 52-week range, it shows you how much the market sentiment can swing on Nike. And don't forget, we're talking about a company with a market cap of almost $100 billion, $99.68 billion to be exact. And an enterprise value, get this, $102.99 billion. This is a heavyweight, especially in the world of athletic wear.
No doubt. Now, for the ratio fans out there, a quick snapshot. Price to earnings is sitting at about 22. But looking forward at expected earnings, it jumps up to around 32. Price to sales, just over 2. Forward price to sales, similar. Price to free cash flow, around 18. And price to book, about 2.6. Lots to unpack there, depending on your focus.
Right, and that difference between the current PE and the forward PE, that can often be a clue. It's kind of what the market thinks is going to happen with the company's earnings, right?
How so?
Well, in Nike's case, that higher forward PE, it might mean they're expecting big growth in the future, or given some recent news, maybe it reflects some bumps in the road in the short term, stuff impacting their current earnings.
That's a perfect segue because their recent performance, Q3 2025, definitely a little weaker than expected. Revenue took a 9% hit. Even if you ignore currency stuff, it was still down 7%. For a company this massive, that's a noticeable dip.
Yeah, and what really jumps out at me is their gross profit margin. It shrunk by 3.3 percentage points. 330 basis points, if you're into the technical terms, landed at 41.5%. That's a lot.
So what's driving that?
Looks like more markdowns, discounts, probably trying to clear out inventory, plus some higher production costs. So basically, they're having to offer more deals to get stuff off the shelves.
Interesting. Now, their overhead, the selling, general, and administrative expenses, those actually decreased, but they did say they pumped up marketing spending. So even with these challenges, they're investing in keeping the Nike name front and center.
Makes sense. Gotta stay visible.
Absolutely. EPS for the quarter ended up at 54 cents.
All right, so let's look ahead. Q4 2025, what's the forecast saying?
The near-term picture, honestly, it's looking even tougher. They're projecting revenue to drop by mid-teens percentage.
Oof, that's rough.
Yeah, part of it's timing of shipments, some of it's those unfavorable exchange rates, and that pressure on their profit margin, it's not letting up either. They're expecting another big drop, 4 to 5 percentage points in Q4. This is even with restructuring costs and those new tariffs factored in. Seems like the immediate future is all about weathering this storm.
It is, and the key takeaway here, the thing to really understand is this. These near-term struggles, they're directly tied to Nike's big push to reduce their inventory, especially in their classic footwear, like the Dunk. Both this report and what they said in their earnings call, they're highlighting this inventory situation as a major focus. What that means for the average person is this. Nike is prioritizing a healthy long-term position. They're clearing out old stock, even if it hurts sales in the short term.
It's like cleaning house. Good for the future, but messy in the moment.
Exactly. But they're not just sitting back and taking it. They're also rolling out this win-now strategy.
Yeah, lots of buzz around that. And Nike's management seems pretty confident it'll get them back on track for that sustainable growth. So break it down for us. What's Win Now all about?
Okay, so it has 5 main parts. First, ignite a winning culture within the company itself. Second, shaping the brand for distinction. Sounds like doubling down on what makes Nike, that unique, desirable factor. Third, accelerating the product portfolio. So bringing new, exciting stuff to market faster. Fourth, elevate and grow the integrated marketplace. Basically boosting their sales channels online and in stores. And finally, winning on the ground. Connecting with local athletes, communities, that sort of thing.
Sounds like a pretty well-rounded approach.
It does. And they're focusing on key markets, too. US, China, UK. Big cities, New York, LA, London, Beijing, Shanghai. Makes sense, right? Put your energy where it matters most.
Makes perfect sense. So they think these challenges will ease up after this next quarter, but they're saying a full recovery will take time. It's not going to happen overnight.
Right, it'll take multiple seasons of executing this win now strategy really well. Consistent effort.
Okay, so even with all that, what are some of Nike's core strengths, the opportunities they've got going for them?
First off, their brand recognition is off the charts. And the customer loyalty they've built, that's gold. You can't just create that overnight. It gives Nike some serious pricing power. Then there's their distribution network. It's massive, interconnected, over 40,000 points of distribution in almost 190 countries. That kind of reach, that's a huge advantage.
Yeah, you can't argue with that scale.
Yeah.
And they're not just coasting on past successes. The report highlights their product innovation. They're always working on something new. The Pegasus Premium, Vomero 18, even that recent collab with Skims, that got a lot of attention.
Oh yeah, the Nika Skims thing definitely made some noise. And it's a smart move, reaching a new audience, people who are into both fitness and that whole lifestyle thing.
Yeah, it definitely expands their reach. Okay, let's flip the coin. What are the risks, the specific things Nike needs to watch out for? We've already touched on the inventory situation. That could lead to further revenue dips in the short term, more sales and promotions.
Right. And then there's the competition. It's fierce, especially in China. That's a crucial market for them, so they'll need to be aggressive with their strategy there. And we can't forget about the global economy. If things slow down, that could impact consumer spending. People might cut back on discretionary stuff, the things they don't absolutely need, like a new pair of Nikes.
Right, belts tighten. And then there's the risk with the win now strategy itself. It sounds great, but actually implementing it, making it work, that's the real challenge.
Absolutely. How well they handle these challenges, how well they execute their plan, that's what will determine their success moving forward.
So what's Wall Street saying? What are the experts thinking? This report gives us some insight. The average price target from analysts over the last 6 months is around $89. That's quite a bit higher than where it's trading right now.
That's interesting. So despite the challenges, a lot of analysts still see potential for growth. But it's important to look at the individual ratings, see how their views have changed recently. That'll give us a more nuanced picture.
Totally. And we've seen a mix of moves. Like Piper Sandler, they upgraded Nike to overweight, $90 price target back in January. But other firms have made adjustments too, reflecting different levels of optimism. It just goes to show there's no single answer, no crystal ball when it comes to predicting stock performance.
Exactly. It's all about weighing different factors, reassessing as new information comes out. Good reminder that investing has its uncertainties.
Now, for the dividend folks out there, Nike recently declared a quarterly cash dividend, 40 cents per share, payable April 1st, 2025. So that's a regular return for investors.
Right, those consistent dividends, they can be a good sign. Signals financial stability, a commitment to giving back to shareholders.
Definitely a plus for some investors. Just a quick shout out to some key players at Nike. Philip H. Knight, the co-founder and chairman emeritus, Elliot J. Hill, the CEO, Matthew Friend, the CFO, lots of other talented folks driving things forward. And on the insider trading front, the report mentions some stock sales by Mark G. Parker, the executive chairman, back in February.
Yeah, insider trading, it's always something investors keep an eye on. Although there could be tons of reasons why they buy or sell, it's not always a direct reflection of how they feel about the business.
All right, so wrapping it up for our listeners, bottom line. Nike is facing some headwinds right now, inventory issues, tougher competition. But they've got a lot going for them too. That incredibly strong brand, global reach, constant innovation. The key is going to be how well they execute this win now strategy.
Exactly. Can they overcome these challenges, put their plan into action? That's the million-dollar question.
It is, it is. Now here's a thought for you to ponder. Given all this, the challenges and the potential, what would be the clearest sign for you that win now is working? What data, what announcements in the coming quarters would really show you it's gaining traction? Or maybe think about this. How could partnerships like that Skims collab change the game for Nike in the world of athletic wear? Something to think about. And hey, if you found this deep dive on Nike helpful, you want more of this kind of focused analysis on business and the stock market, hit that subscribe button and don't forget the notification bell. It really helps us out. Thanks for listening.